Hi guys, it's Ian and this is your weekly market news video. It is Saturday, the 3rd of March 2025. Non-farm payroll Friday, much anticipated data point came out better than expected. We saw a move to the upside in US indices, pretty muted rally. US30, which is the Dow Jones, had moved up just over 1%. So not sort of aggressive price action. What I want to be doing in this video, I want to talk about risk on, risk off, okay, and what drives different currencies and what generally happens with the US dollar with regards to risk off. So normally when we see risk off, we get a run to safe haven. So traders will buy the Swiss franc, they'll buy the Japanese yen, and they'll also buy the US dollar. Now, to a certain extent, that's not been happening. Okay, we've seen a sustained move lower in the US dollar, but I believe that correlation could come back in pretty soon, and we could see a move to the upside in US dollar. So what I'm looking for is to highlight medium-term trends, or what I believe are going to be medium-term trends, and then I want to highlight short-term patterns to potentially get me into the medium-term trends. I also want to talk about whether or not this is counter trend with regards to the big picture analysis, or whether or not this is trading with the trend. Now, for me, because I'm a swing trader, I want to be trading with the trend most of the time. If I've got a very good R set up, so risk against reward, then I'm quite happy to use a counter trend trade, but I will lower the amount that I'm risking for that setup. Okay, we're going to start off with the US30. Excuse me. From this product, I'm going to get my risk on, risk off established, if you like. I'm expecting volatility at the start of the week. The reason that this is then important is that I can use that as an overlay for other products. Okay, the DXY, Swiss franc, yen, etc., etc., etc. Let's get to the charts. So this is the US30 Dow Jones. This was the move up from the data release on Friday. So this is the 1 o'clock candle UK time. Came up and we've just paused. Okay, so we've got this barrier 41,410 and 41,440. It's moved up there, it's paused. Have I got a reversal signal? No. What I do like about the fact that it's paused at that level is that because we will then get a barrier here. Okay, I'm actually going to highlight that a bit more aggressively. And that's going to be the swing high from last week. It's also going to be Friday's swing high. Okay, so there's two factors that lie onto that data point. This indicator here, and these indicators down the bottom right hand side, they're called Trend Predator Pro, easy for me to say, and they highlight breakouts, false breakouts, and they're basically the reasoning behind it is to try and offer you setups, if you like. You can't just use it blindly. At the moment it says breakout continuation, because you need, or for me, I need to use it as an overlay. But what it is good is it is good for a visual confirmation of seeing what I want to see. Okay, there's a great book out there which is called Trade What You See, and in there, Michael Douglas, I believe it is, says trade what you see, not what you want to see. Okay, so what I want to see, I then need to see it to confirm that I've got my plan. And also, what I'm doing when I'm doing chart analysis, I'm highlighting a trade plan. So what I'm doing, I'm planning the trade, and then I've got to execute the plan. So plan the trade the plan is the idea. I'm a swing trader. I'm not trying to catch tops and bottoms. Okay, I'm looking for trends to be established, and then I'm hopping on the train, if you like, and leaving the station, hopefully. And this is normally at the second stop. Excuse me. And when I say the second stop, I mean the second wave in Elliott Wave formation. So Elliott Wave formations move in 5 waves. So looking at this chart now, what do I see? What is important to me? Well, the most important thing to me is this barrier here, and then this red line that I've just stuck on here. It will actually be highlighted next week. And what I want to see, I want to see a breakout to the upside. So I want this bullish trend to continue. However, I then want to see sellers to return. I want to see a move to the downside. That will then highlight a false breakout, daily and weekly false breakout on the Trend Predator Pro indicator. So as we move higher, if we move back inside, and again, I don't know if that's going to happen, but if we move back inside, I then get my signal, okay, or my bias that we've had a false breakout. What do I then want to do? I then want to wait for wave 2. This, to me, this area, this barrier, this 41,400 area, will then become a strong upside barrier. And what I want to see is this. So wave 1 being established, wave 2, 3, 4, 5. I can't project the 261.8% extension level yet, because I don't have a swing high and I don't have this first swing low. What I do have is a solid barrier. And basically what I want to be doing is I want to be selling into this second wave. Why is it so important for me to see the reversal established? Well, it's all basically down to money management. I know where I'm going to get short. I will then know where my stop loss is, because it'll be above the previous swing high. And when I've got this first wave established, I will then be able to use my fib levels, and I'll be able to project my target. Now, this is where it gets a little bit complicated, if you don't think it is already, because it depends what I'm seeing down here as well, because this could then become a cipher pattern. Okay, so we could end up with something like this, and at the moment I don't know, but say the cipher pattern completes there. So a lot of time when novice traders or people that are just using 261.8% fibs, they get into the second wave, it's a great setup. They see it bleed to the downside, they get a little bounce off the previous swing low, 161.8%, and it continues to move lower, and they have this 261.8% extension level as a target. Sometimes it will hit, sometimes it won't. This 224% is the completion of a cipher pattern, and sometimes it will only get to this level and then it will reverse to the upside, and you've had a great trade on and it's stopped short, and all that happens is it goes back up and it takes out your stop loss. So I like to use Elliott Wave formation. I like to use cipher pattern analysis as a overlay, an overlay. And one good book, which I said earlier, I believe, was Trade What You See. So in there they talk a lot about cipher pattern formations. What do I also want to do when I've established my trend or this head and shoulders formation? I want to work out where the target level is for that, because I also believe that other traders will be trading it. Okay, so again, we talk about measured moves targets quite a lot. There's 3 main chart patterns. We did a blog about trending and non-trending markets last month, and we talked about the flag formation in there. please go and have a read of that if you want to learn more about a measured move. So there's 3 different chart patterns that offer a measured move target: a head and shoulders formation, an ending wedge. Both of those formations are often seen at the end of a 5th wave with regards to Elliott Wave. So this is the 4th wave, 5th wave, A, B, C. And so again, you can use it as an overlay. So the measured move target on a head and shoulders, we use the projected length of the head to the neckline, and at the moment that's not established, but the measured move target is then a breakout of the neckline. So basically you're in wave 3 normally, and you break out to the downside. Why is that important? Because you don't want to get shaken out of the trade. Okay, so when it moves lower and it hits this level and we see a small correction to the upside, a lot of the time, and again it's not always, wish it was, a lot of the time that will be wave 3 and 4 before you hit your main level, which is wave 5. So the measured move target on the head and shoulders formation, the measured move target on a bullish or bearish flag is the length of the flag pole projected from the base of the flag. So it's actually an AB equals CD formation. And the wedge target, the target for the wedge is the beginning of the wedge. So it's important to know these levels, and the reason it's important to know these levels is going back to this again. Okay, probably the most important tool on your trading platform is this risk reward calculator. Okay, your entry, your stop, your target. Without it, without solid money management, you're going to find it very difficult to make sustained gains in trading. So just to highlight what we've talked about with regards to US30, I want to see and hopefully see a breakout to the upside in early trade. I then want to pull back in below this 41,410 level. I will then want to use that as an upside barrier. If you'll notice on the right hand side here, it's got all these different products. US30's got a red next to it. It's my prime setup going into next week. What's quite interesting as well when we're looking at that is just to go down to we're going to look at dollar yen very quickly. Okay, this was the potential for big picture analysis in dollar yen. So wave 1, wave 2, wave 3, wave 4 and wave 5. In the report on Friday, I highlighted that this was a resistance zone to the upside and this was a support zone to the downside. Okay, what was resistance becomes support. So 144.03 was the previous swing high from April 25, and 143.84 was my support level. So we've got a nice confluence area. That's what we want to see. We want to see levels close together that are tight support or tight resistance. I think go back to the US30, that's going to be a tight resistance level if we get a breakout retest on that index. So here we've gone down and we've hit this level. What is important on this time frame, on this chart? Well, this is really important. Wave 4. Wave 4 cannot go above wave cannot go below the high of wave 1. So wave 4 basically has to be around about there. So wave 1, wave 2, 3, 4. So you're continuously making higher highs and higher lows. We broke that sequence. We didn't make a higher low. This is the last swing high. This has been breached. Okay, so this gets taken off the chart. Okay, just get rid of the 161.8% extension level up here. It's void. What was important on Friday, and I don't normally go down to, I wouldn't call them micro time frames, but down into shorter time frames. 161.8% was located at 143.80. Our support level was located at 143.81. What can I see? Not what I want to see. What can I see? I can see 5 waves. Now that, with the fact that we've breached that high, so we've breached that swing high, we've now got a 5 wave count to the downside. What happens when we get an Elliott Wave flip? Well, we move from 5 waves up to 5 waves down, and the 5 wave sequence down should be the first wave, okay? Not the C wave in a corrective formation. Needs to be close or at the top of the trend. What does this suggest then? Well, it suggests that this move higher in dollar yen, and it's only off a 15-minute time frame, but it suggests that this move to the upside is going to be corrective. Why is that important? Well, dollar yen has a tendency to follow the US30. Hasn't been of late, okay, but going back to that US30, what are we looking for? We're looking for a breakout, pullback, retest, okay. So this, what we could potentially see in this product, is a confirmation topping formation. Okay, so 61.8% Elliott Wave analysis often suggests that that is the start of your second wave. So going back to Elliott Wave, wave 1, wave 2, and then moving lower in the bigger sequence. However, this is where cipher pattern analysis comes in very handy. Okay, this is known as an inside corrective formation, A, B, C, D. What will normally happen is impulsive waves, or the waves that you want to be trading with. If you're a swing trader, you want to be trading in the direction of 5 waves. You don't really want to be trading in the direction of 3 waves. What is important is that 3 wave patterns are corrective. So 5 wave impulsive, 3 wave corrective. So this would suggest that although you see this move to the downside, like I said, Elliott Wave analysts will probably think, well, this is the start of wave 2. It might be the start of wave 2. It might break down below. But considering that we've still got that sentiment in the US30 for it to go slightly higher, that means that the the dollar against the Japanese yen could go slightly higher. So this could just be a short wave. As long as it doesn't breach Friday's swing low, then it's got ample scope to be a 3 wave correction. You then want to be getting in at the completion of the cipher pattern, okay? And that again is important. Cipher patterns, Elliott Wave formations, most textbooks will say that you need to wait for the completion of the formation until you trade it. I will trade wave CD as long as it's a bigger overlay. So as long as I believe that I'm trading with the long-term technical picture. So dollar yen, the bias has flipped. That could be in line with our US30. We're now going to have a look at the majors to see what's unfolding in those. So let's just go to dollar products, euro dollar. Okay, I'm just going to take this off for a second, and we're going to have a look at this chart. Okay, so this is the weekly chart. What does it show? And it's very important to look at big picture analysis and then break down into shorter time frames. I'm sure you've probably heard that before, but this, to me, not a very pretty chart to look at, but impulsive move to the upside could be seen in 5 waves, right? 1, 2, 3, 4, 5. What does that dictate? It dictates that I should really be looking for a move lower, because that could be the completion of an Elliott Wave count. Okay, so 5 waves up should dictate 3 waves down. This I think, and it looks the same on sterling dollar, looks like an evening star formation. Okay, not quite a doji star. I wouldn't put this candle in the doji region. The body's a little bit too big. But what is important is the fact that this third candle closed lower than the open of this candle here from the 14th of April. So 5 waves up, evening doji star. The bias flips to the downside. What do I now want to be doing? Well, really, I should be looking for top-in formations. If I'm going to trade now, counter trend, then I should be aware of it. My risk should be less than it normally is if I'm trading with trend. Okay, so if I'm trading to the upside, I want to take care, if you like. What do I see? Well, this price action on Friday, if we go back to the daily chart, pretty messy. Okay. Can't really take a great deal away from that. But what can I take away from this? Well, I can take away from the fact that this previous swing low, okay, held pretty well. Okay, so evening doji star, that's held quite well. Where do I see a swing high? I'm just going to put the the indicator on here, which will mirror this onto all the different charts. So I see a previous swing high up there. I see consolidation. I see mixed intraday trading. I see intraday traders getting chopped around inside this zone. I see a spike to the upside. I see that it's come back in. So this being a false breakout. What will normally happen when we see a false breakout? Well, what will normally happen is we'll see a retest of the previous swing high. That will then potentially form a head and shoulders pattern. So head, left shoulder, head, right shoulder, move to the downside. What did we just say in, well, 5-10 minutes ago with regards to Elliott Wave and with regards to the end of a fifth wave? We said that it'll either finish with an ending wedge or it will finish with a head and shoulders formation. So the weekly chart is giving us that bearish bias, right? We really should be looking for shorts. But the daily chart says we haven't completed a topping pattern. You know, there is scope for a move to the upside. So let's go back down to a shorter time frame. I'm going to get rid of that because that was my overlay. And this is this line here, okay? It's a previous weekly swing high. It's a daily swing high. It's an important level. What do I see? Well, this was Friday's price action. So opened up low, or actually Thursday was sort of a relatively low close. We then moved up, and then all of this sell-off was taken out. Can I see a move up towards this sort of level? Let's use cipher pattern analysis as an overlay. Okay, wave 1, wave 2, potentially 3, 4, up in 5. Does anything else line up? And what did we previously say about 224%? 224% can be the completion of a fifth wave. So a lot of Elliott Wave traders get in wave, or by 2, which is a great idea, go up in 3, correct lower in 4, and then they expect it to get to 261.8%. And all that happens is it gets to 224, and then it reverses. Why? Because this is the cipher pattern formation. Okay, so what I like here as well, when I look at Elliott Wave, so using Elliott Wave as the overlay, wave 1, down in 2, 3, look where this 4 is likely to go. This is a breakout level, so retest the breakout level, and then up in 5. And again, that will then be that squeeze through that left shoulder swing high, and then a move to the downside. Do I want to be trading this trend? Not really. why don't I really want to be trading this trend? Well, because the big picture analysis is now for the downside. So it's the weekly chart says that we're going to go lower. The daily chart says that we're going to go lower. What should I do? There's a textbook rule. There's a textbook rule. I should sell here, because then this is wave 1, wave 2. I know my entry, I know my stop loss, and then I can work out my swing trade target, which could be a lot lower, and it will give me a decent risk reward setup. So just to highlight what we've talked about in this major currency pair, medium term looks lower, but I think there's ample scope to move higher, to form that right shoulder, to form this crab pattern, as it's known, close to 115.23, and then potentially get on the swing low to the downside. Why do I say potentially? Surely if I see this, I should be getting short. It's not necessarily going to play out. You know, all that happens on Monday is we see a breach of this swing low and the medium term top has then been established, and then we move to the downside. What do I like about this? I must, you know, there's got to be bits that I like about it. Well, the bit that I like about it is that if I get in around here, I know my target, I know my entry, I know my stop. Okay, every single trade that you execute, you should have the same format. Okay, plan the trade, trade the plan, know what your R rate is. This part here, 4.36, it highlights anything over sort of 2.5, 3R, good setups, but you've got to know whether or not you're trending or counter trending. Otherwise, it becomes a gamble, not a trade. Okay, sterling dollar, and again, really sort of stalked this one last week. The big picture analysis is the same. I'm actually going to take this off this cipher pattern. Why am I taking it off? Because it was from that swing high. Okay, if you can see that. So the 2nd of May at 6 o'clock in the morning, not from the swing high here. If I place a projection tool on that swing high, then I'm getting a lot higher. Let's just, I haven't actually focused on this yet. No, it's miles out. It's 224%. I'm looking over here. Potential left shoulder, potential right shoulder. If it breaches this level here, 132.60, then this pattern is sort of negated. What I would be careful of is just trading this breakout. What can sometimes happen is that we get a false breakout to the downside. So this breaks lower and then it moves up, and then we see 5 waves and we get back into this sort of reverse trend. So really the medium term bias, and again I'm not going to look at these higher time frames because I already know what they are. They highlight a potential reversal with regards to swing trade possibilities, but I want to be trading the sort of right shoulder of the topping pattern, okay, which is going to be projected between 134.15 and 134.24. Dollar Swiss, and again this is sort of screaming out that we're still in a short dollar outlook. We've got a previous swing high that actually held on only by a couple of pips. It's a double top formation. When will the double top formation be confirmed? It will be confirmed on a move through this level here, which is at 81.98. Okay, we'll then look for this inside cipher pattern, probably completing around 81 the figure. Got some resistance located at 82.90. And again, big picture analysis is for higher levels, so really want to be trading the completion of the cipher formation if you're looking to swing trade. If you're looking to day trade, there's nothing wrong with trading this correction, as long as you realise what you're doing. New Zealand dollar, Aussie dollar, New Zealand dollar, they are predominantly risk currencies. So when stock indices move to the upside, it's normally quite buoyant for New Zealand dollar and Aussie dollar. So you can see here from sort of 1 o'clock we saw this spike higher up to the 61.8% fib. Why is that important? Again, we're looking for topping patterns. Okay, so cipher pattern analysis would suggest a Gartley around about 60 the figure. Okay, so moving lower, could even be finished that correction, and then want to be selling into the completion of the pattern. Aussie dollar, we've hit a resistance level. Big picture analysis. Okay, again, I can see a wedge. I've got a wedge target down here, which is at 63.52. We've got the resistance zones. That's Friday's swing high. Okay, it's going to be last week's swing high. Have we finished the pattern? I'm not quite sure. Again, what could possibly happen is 1, 2, 3, 4, and then up in 5. Too early to sort of trade for me. What I'd want to see is a move higher, come back in, retest of resistance, and then move lower. And I'd want this to measure up. So I'd want my fib level. Again, it's too early to tell. I want my fib level to line up with the target level of the wedge formation, and I think that's just about everything covered. Gold, as everybody loves gold. I've put this on here this morning. Again, we can get a lot of false breakouts just using the bias that we have with regards to US30 and the bias that we have with regards to dollar products. It really says that we could see a correction to the upside in gold. I've put this on here, 3 touches. Okay, I can see an ending wedge pattern, but I have a diploma called the STA diploma, the Society of Technical Analysts, and from that I gained a few sort of knowledgeable bits that I didn't really know before. And one of the parts that you will learn is that on chart patterns you should have 3 touches, minimum of 3 touches. Okay, what do we have here? Well, this is the start, so this is touch 1, touch 2. We haven't seen touch 3. So this, to me, this wave count or this formation has not completed. You know, we could get a breakout here, and then what could happen is we just come to back, retouch, and then we move higher. So what I prefer to see, if you are going to trade gold, and there's no real setup in it at the moment, is a retouch for the 3rd time, and then a breakout to the upside. And by the way, we've only touched twice here, so what could happen is you get this horrible price action for a move to the upside. So at the moment the bias is mixed. This will probably highlight Trend Predator Pro when it breaks next week's swing low. It'll probably break out, highlight a fake out, or sorry, a breakout downside, so a downside breakout, then to come back up inside it will say, well, that was actually a fake out low, and then it will give you like a bullish bias, and then it will hit this, come back lower, gives you another breakout downside, and then fake out. So all that's going to happen is, what I'm trying to sort of say is, for me, there's a very good possibility of just getting chopped up inside there. You know, 1 minute it's telling you should be breaking to the downside, next minute it's telling you that it was just a fake breakout, which does happen a lot in trading, because smart money's soaking up liquidity, knows where stop losses are or potentially placed, goes down, takes them out, moves back higher, takes out more stops, etc, etc, etc. So just to highlight what we've talked about in this video, my favourite setup by far going into next week is going to be US30. I want to see a breakout to the upside and then a retest. Potential topping patterns: euro dollar, sterling dollar, dollar Swiss would highlight we've got further downside to go in the US dollar. Those two products would really want to see completion of head and shoulders formations to get in on swing trades. Okay, that's it for this week. I'll be back again next week. Don't miss out on the system trade setup video from Wednesday. We highlighted a NASDAQ setup this week. Actually went down to the support level and then moved aggressively higher. So it actually flipped me because I was expecting to sell into rallies, and it was actually a buy into dip setup. But the levels still held. Okay, all the best, and I'll speak to you again soon. Many thanks.